Happy St. Patty's Day, everyone. Hope you all are having a great day. Or as the traditional Irish greeting goes, top of the morning to you, even though it is the evening. And the responses to the rest of the day to you. Those that are Irish, especially my compatriots in Boston, are enjoying green beer and all the things. I hope you're doing some celebrating in a safe way. We're not talking about St. Patrick's Day today. We're talking about Trump signing 2 new orders, which may or may not be as fun as talking about St. Patrick's Day. But that is the breaking news for this week. President Trump signed 2 new executive orders. It seems like every other day he's doing that. And this is, he's really targeting the housing market as of late. This time around, he's targeting getting new inventory, building up the inventory, adding inventory. So, we're loosening the reins, the restrictions on new construction, which he has absolutely talked about before. But he also signed another executive order aimed towards freeing up mortgage credit. So this is kind of interesting. This gives me initially some room, gave me pause because I had flashbacks, PTSD flashbacks, when the great financial crisis crashed the market. And it was all because of lending requirements were loosened. We're going to dig into it. We're going to dig into it tonight, talk about all the things, talk about the facts and all that fun stuff with some other stuff thrown in today. But we've got Tim. Tim's already asking on the poll. I just having a little St. Patrick's Day fun. Want to know what would happen. What would you do if someone gave you a pot of gold? Unlimited pot of gold. What would you do? What would you do with that money? Would you pay off your debt? Would you buy a house? Would you buy an island away from everybody and just live your best life with nobody around? There are times that I would be on board with that for sure. But Tim wants to know how big the pot is. And that is to use your imagination. It says only large enough for that beach house. Amen. Amen. Kimberly in the house, wishing everybody a happy St. Patty's Day. Happy St. Patty's Day right back to you. All kinds of good things. Seems like a typical work day, but you know what? It's 5:00 somewhere. For sure, right? That's the way it goes. So what are we talking about tonight? Well, we got our typical housekeeping stuff. Share your wins. I want to know your housing wins. I want to know just in general, like to spread some positivity with this live stream. Guys, there's no shortage right now. There's no shortage of adversity. And, the news, because we're so connected, it's hard to avoid. It doesn't matter if you intentionally don't turn the TV on. It doesn't matter. It's going to get you YouTube or Instagram, all the socials. So you know what we can do to combat that? We can't avoid it, but we can combat it by focusing on good stuff. So share it with us. Let us know. We can all support you and all the things, because that is makes me happy, and it's contagious when that happens. So QQQ, if you guys could put QQQ before your question so I don't miss you in the chat. I work really hard to not miss your questions, but sometimes you guys have conversations in the chat, which I love and encourage as we support each other. But I don't want to miss them. I want to make sure that you guys get your questions answered. We got the poll, as I mentioned, about a good old, just a fun St. Patty's Day poll. Tell me what you would do with a pot of gold. Inquiring minds want to know. And I kept all the answers PG, so there you go. Today's headlines, we're talking about Trump signs a new executive order. What is going on with that? We're going to take a look at that and all the things. I'll take a look at mortgage rates as well. As a follow up to last week's conversation, because we're watching it. With the Iran conflict and how that impacts the overall economy, and the overall economy absolutely impacts everything in the housing market. So we're keeping an eye on that, and I'm going to give you an update on where mortgage rates are at, and all the things. So we're going to jump right into it. Here we got Leslie in the house. Hello, good to see you. Happy St. Patty's Day. Hope you're enjoying it, very much so. All right, let's get started. Let's get this party rolling. So, President Donald Trump signs executive order to cut red tape to build more homes and tackle housing affordability. This is where we're at, folks. This is the thing that everybody's crying about and stressed about, affordability. Period. It's been a topic. Let's just put it that way. President Donald Trump signed an executive order aimed at reducing regulations that slow down new home construction and push the cost of building higher as part of a broader effort to tackle the nation's housing affordability crisis. The order was signed on Friday the 13th, comes a day after the Senate's passage of the bipartisan 21st Century Road to Housing Act. I did a whole live stream on this a couple weeks ago, and we did a deep dive into what that Housing Act, the Road to Housing Act, is, what it covers, how it's different from another bill that had bipartisan approval, support, that kind of fell by the wayside. They kind of repackaged it into this new one, and the Senate passed it. So we'll see what the next step is. We'll see what actually trickles down. Some of these things, all politicians do this, right? They make big promises, and then we have to wait and see how it impacts us. This is the Road to Housing Act, which seeks to expand housing supply, reduce regulatory barriers, this is not new in the sense that Trump's been talking about this since the campaign trail. It says the bill has dozens of housing reforms aimed at making it easier to build homes and obtain financing to buy them. It says the order signed, which is what we're talking about today, the order signed by Trump, directs federal agencies to review and potentially eliminate rules that delay residential home construction or increase building costs, including permitting requirements, environmental reviews, and certain building standards. He's talking about a very, a portion, a part of the process with new construction, but albeit probably a smaller portion of the process, a smaller cost of the entire overall process. Will it be enough to change, and encourage builders to keep building? I'm going to get into that. It says officials will also consider changes to policies affecting manufactured housing, development density, and other building standards that critics can say can constrain housing supply. And what they're talking about there is, the fact that manufactured housing, now we're not talking necessarily mobile homes, although there is talk about changing some of the financing restrictions on that. We'll get into that in a second. But when you're looking at anything that does not have a foundation, it can be tricky. Mortgage lenders need some type of collateral. When they issue you a loan, they want a collateral. They want some kind of assurance that if you default on that mortgage, they've got something to hold to ensure that they get payment. So they use your house as collateral. You don't pay your mortgage, they take the house. Well, if you are taking a loan on a property where you don't own the land, it makes it much harder. It devalues the property, and that gets a little sticky when you're talking about manufactured housing or modular homes, where eventually modular homes come in and they become regular single family homes, but a lot of lenders won't touch them because they're not traditional stick-built homes. Homes that are built, in the traditional sense. They're built in factories and so forth. So opening that up, because they are less expensive, typically opening that up could make a difference. It says America currently faces a shortage. I know this is a lot. This is hard to believe for a lot of you folks. Yes, as tons of homes for sale in my neighborhood and all the things. We're not under an inventory shortage, but we are. And the data supports it. It says America currently faces a shortage of 4.03 million homes as new construction faltered last year, according to the 2026 U.S. Supply Gap Report. Economists at Realtor.com found that the housing deficit persisted through 2025 as construction fell nearly 50,000 units short of demand. Well, it makes sense that if the number of homes being sold, number of transactions in a given time period is going down, a builder is not going to do a ton of speculative building, which is what happened in the great financial crisis that led to disaster. A lot of builders folded. And if there's not a lot of folks that are stepping up to the plate looking to put deposit down on homes, a lot of buyers back out or press pause. They don't really back out of the market. They press pause in the market. The number of active buyers decreased. So it would stand to reason that there were less homes sold. It says despite 1.3 million housing starts are new construction. That's what they call new construction starts. When a new home is starting to be built, they start going through the permitting process. It says the creation of 1.4 million new households. I'll read that again. The creation of 1.4 million new households. Those are households that are being created by millennials coming of age, that are aging up enough. They're out of college. They've got their job. They've saved money. Look at the parents, saved up the money for down payment. Now they are ready, willing, and able buyers. Those are housing that's creating a new household that needs a property. For perspective, the number of millennials coming in as buyers is bigger than baby boomers and the Gen X generation combined. Let that sink in for a second. The number of millennials is that's the potential. And this is the reason why we're in this predicament with not enough homes on the market to satisfy the demand. It says to address the growing concern, the White House says this latest executive order is part of a broader deregulatory agenda to expand housing supply and help more Americans achieve home ownership. The order is one of several housing-related actions announced by Trump this week. A separate order on Friday focuses on expanding access to mortgage credit by easing regulatory burdens on lenders, particularly small community banks, with the goal of making loans easier for qualified buyers. I'll be honest, when I read this, that is where my PTSD from 2006, 2007 kicked in. Because one of the main reasons, one of the things, the big contributing factors to why people got into trouble and why they ended up foreclosing, having to do short sales, is because the loans were too easy. It was too easy to get money, so the Fed stepped in. They created new regulatory policies to prevent this from happening again. And this is what makes that. And at this point, looking at this, I was questioning whether this is something that is on repeat to make it easier. I wasn't super happy about it, but we're going to dig into a little bit more of what it actually means. So we got, let's take a quick look at the chat here. We got Tracy in the house. Hey, how you doing? Good to see you. Oh, we got Jose with the QQQ. I'm going to get through this article, and I'm going to bookmark your question and get back to you on that, Jose, for sure. We got Anna Omaha in the house. Hello. Good to see you. Lisa says, I have a modular home. Seems like a regular house after assembly. It certainly does. It's just different in how it's handled. Because of the fact that there's not, just like a new construction home is different than how it's handled. When you're getting a home loan, if there's not an existing home with an existing tax bill, one of the ways that mortgage lenders figure out how much house you can afford and create that pre-approval is they look at your debt, they look at your income, and they say, okay, this is how much you can afford in a monthly mortgage payment. Take into consideration FICO score, of course, and a whole number of factors. But overall, it's debt and income. What's your debt to income ratio? You hear lenders talk about that a lot. It boils down to how much of a housing payment you can afford. And that housing payment is determined by an estimation of taxes, an estimation of insurance. Well, if they don't know what the home insurance, the taxes are for a particular property, it can get a little sticky. Now, in new construction, typically what they'll do is they'll look at nearby homes, take an estimate, and use that estimate for your monthly mortgage payment. That's why a lot of times, when you get your monthly mortgage payment, once the town finally assesses the property, your payment may go up and may go down. Unlikely going down because they always overestimate. They try to overestimate because the bank doesn't want to be, in arrears. But if there's no history, you have a modular home, it's hard for them. It's a different type of process to figure out what exactly that house is going to be assessed at if there's no comparables and all the things. So it gets a little bit stickier. Hey, Clark, down in my referral partner down in Atlanta. How you doing, my friend? Happy St. Patty's Day. Good to see you. Good to see you. So there's 2 parts to this, and I'm going to dig into them separately. So the first thing I want to dig into is on the building, and I've talked about this before, dug into this. This is not necessarily new, but Trump is doubling down on this. This article out of Housing Wire dug into it a little bit deeper, published on Friday as well. And this article, get you lined up here, goes on to say that the White House announced on Friday its effort to challenge what it calls the unnecessary regulatory barriers to home building by issuing a broad executive order to reduce environmental, permitting, programmatic restrictions. I am not sure what they're trying. Problematic restrictions program. Anyhow, I'm having a moment. That an inability to read a word. Anyways, that federal officials say are contributing to the nation's housing affordability crisis. I would argue that this is probably over dramatizing the contribution. Regardless, it says the order signed by Trump directs multiple federal agencies, and that's important because building is local, and local building codes, local directives will be ultimately the thing that is going to override, what the federal government says and does, and that's important to know. If the federal government says you have to do this, there's nothing saying that any community in the country can say, yeah, we'll meet that, and then we'll add this. Massachusetts did that with smoke detector inspections. And, after this young child, her name was Megan, had passed away from carbon monoxide poisoning, they passed Megan's Law, which is now the smoke detectors are required and CO detectors are now required. So we're going to add that on top of whatever the federal regulations are. They can still do this, even though the Fed, and that's important to know because even though the Fed wants to put these things in a place, they can only suggest it to local agencies. Don't let them, they can't flex that far. It says for home builders, developers, residential real estate investors keeping track of Washington's focus on housing policy, the orders signal a priority. Accelerate approvals, reduce compliance costs, and expand incentives related to single-family housing development. Now, the chairman, Bill Owens, chairman of the National Association of Home Builders, is on board with this. This opens up a gateway for potential, streamline permitting and the ability for builders to not get caught up in red tape to put the homes up. Yes, that does raise red flags. I know what y'all are thinking. It raises red flags of building homes too quickly and doing it in such a way that you're losing quality, which we can't afford to do. I watched a video earlier today about this development in Utah where they the development's a 21 home development that when they prepped the site, they did not have the proper geological inspections. and in terms of how far down they had to dig and the material that needed to go on and so on and so forth. And now these folks that bought these homes in 2022, they are these homes are literally sinking. And it was just, I'm watching this news article interviewing some of these homeowners, and these homes, 3 years old, have cracks this wide and larger throughout the house. Along the edge of the doorway, you can see right into the house. It's horrendous. It's scary and gross, to be honest. And of course, lawsuits have been filed and all the things, but we don't want to streamline it to the point where, these builders are making it too easy to cut corners. Maybe we should add some regulations on that if the White House is listening. So what does the order target? This is the thing that I wanted to talk to you about. It says, among the most consequential areas for home builders, environmental permitting. Now, I'm very in tune with environmental permitting, being here in Massachusetts. I'm in Plymouth, coastal town. So we have our fair share of environmental challenges. We have the ocean. Plymouth has over 300 ponds. 300 ponds, you cannot build within 100 feet of any body of water without getting the Department of Environmental Protection involved. It's a process. It's there for a reason, but it's a process. It says that the order instructs the Army Corps of Engineers and the EPA, Environmental Protection Agency, to review stormwater rules, Section 104, wetlands, permitting under the Clean Water Act and related water quality regulations. These requirements often shape development timelines for land acquisition, subdivision approvals, and horizontal development. Yes, review is a good idea. Always, because things change. Loosening them to the point where we're worried more about today and not enough going forward into the future. I mean, building a house today, but uprooting an entire ecological system so that some animal or creature is going to be extinct in 10, 20 years. I don't think that the folks that will be on this planet long after we're gone, I don't think they're going to appreciate that. And all these creatures. The thing is, you have enough forethought. All these creatures. I have a couple environmental. My sister was a environmental science major, so kind of a little bit in tune with this stuff. But all these things were there. Were put there for a reason. For a reason. I'm not saying they shouldn't be reviewed. I'm not saying that there might be some redundancy. It's government, after all, right? But this is, tread lightly, as the signs go. Tread lightly, because you don't want to play games with this stuff. Any NEPA review timelines. Okay, the administration also directed the White House Council on Environmental Quality to expand the use of categorical exclusions under the National Environmental Policy Act, potentially allowing certain housing and infrastructure projects to bypass lengthy environmental review processes. Again, could be substantial to, definitely review for sure. Shortcuts. I'm afraid of shortcuts. That's what I'm afraid of. Shortcuts never end up. You never end up on the right side when you carelessly make shortcuts. Energy and water mandates. Federal agencies are directed to review and potentially eliminate energy efficiency and water use requirements affecting housing programs, including standards for manufactured housing and federal financing programs. Now, I am not certain what particular they're referring to in terms, include standards for manufactured housing, federal financing programs. So there are, under the federal financing programs, there are several loan products, VA loans, FHA loans that require water testing. And it's called a portability test. A portability test, it basically is checking for bacteria. Is the water drinkable? Now, it could need hard, it could be hard water, it could be soft water, it could be, you could need a water filtration system, but it may not be the best water for your skin. It may not taste the best. Maybe it has too much chlorine or whatever. But as long as there's no bacteria, as long as it's safe, then there's not an issue. Rolling back that standard, this is potentially opening a can of worms that I think would be dangerous. There are communities in this country that already struggle with not having clean drinking water. We don't want to build properties that have the same issue. They'll be on the 6 o'clock news. Manufactured housing and low balance mortgages. Says the order also instructs agencies to examine rules affecting chattel lending. Now chattel lending is lending, like I was talking to you earlier about loans when there's not a traditional loan, when there's not a foundation. When there's not a foundation, when there's not, you don't own the land that the home sits on, that requires outside lending, a special type of lending, specialty lending. That's what they're referring to as chattel lending. It says they're examining the rules affecting chattel lending and financing mechanisms tied to manufactured housing, a segment many policy makers increasingly view as critical to address affordability. I'm 100% on board with this. And I'll tell you why, because, if you're considering, say you're in your family home, you've outgrown the home, you don't need all the space. And some, mobile home parks, we don't want to disparage, the idea of mobile home parks, is not, it's not what you see on TV all the time. Some of these places are really nice, with clubhouses and pools and all the things. The problem is getting financing. Now I don't, deal with those very much anymore, but in my career, I have helped some folks buy and sell a few mobile homes, and it is there's literally like two lenders in our South Coast, Massachusetts, where it seems like there's a million lenders to choose from. You have to go to a specialty lender, a specialty program to even talk to someone about qualifying. And then they're looking at they require 25% down payment. The rate is always significantly higher than a standard single family mortgage. That in itself can not only increase the cost of that mortgage program and that monthly mortgage payment, but it makes it harder. And a lot of these mobile home communities in my area anyways, they're 55 and over, which means a lot of these folks are on fixed incomes. It makes it out of reach to treat those folks and, treat those mortgage programs as a traditional or variation of a traditional mortgage and take advantage of the lower rate, a regular rate that's competitive. That could be a game changer for a lot of people. A game changer, especially considering that those monthly fees are typically higher because you don't own the land. You're paying, essentially, when you buy into a community where you don't own the land, that town still taxes that property. But who pays the taxes? Well, the person, the organization that owns that land has that tax bill. They divvy it up, they pass it on to you. And that's why those monthly fees are substantially higher, because a portion of that goes towards the infrastructure and the tax bill for that property. But you don't own it. You don't own it. So it's definitely something that could be potential. And you know what? A lot of these communities, are they can have it. There's a provision in the Fair Housing Act, Fair Housing laws, that allow a community like that to be age restricted, 55 and over. I do agree that there's a place for that, but I'd love to see some more opportunity for some younger buyers that maybe can't buy a stick-built home or a condominium, but they can afford to get into a very modest modular home. That is a good stepping stone for them. Something to take into consideration. Let's see here. So now, from a local perspective, it says the order takes a shot at what it cannot specifically nor directly control. It getting back to that, federal versus local, a battle, I should say, that conflict. It says many of the most restrictive housing regulations, zoning, growth boundaries, entitlement delays, building code mandates are set by state and local levels. That's where, like I was just talking about, you have to get your federal regulations, and then you get your state and local on top of that. This is recognizing those constraints. The order directs the Department of Housing and Urban Development. We lovingly call them HUD. It says to develop a set of best practices. Now, this has been talked about for a long time. And just as at the very top of I should mention at the beginning of the show, this is an executive order. Executive order has about as much weight as the paper it's written on. I mean, it does start the process. We could end up with this thing being in the trash can. It could be entirely different by the time it's all done, going through the process that they have to go to make it actually happen, put it into law. But this best practices has been something that they've been talking about since day one. And it says, part of these best practices, these carrot and stick practices, because they're going to try to entice. They can't force state and local governments to do this, but they can try to entice them. It says capping permitting timelines and fees would be a suggestion. Allowing by right single family development, which is interesting. It says I'm not quite certain, whether they're talking about like first right of refusal, where certain developments where you can actually, have it so that, I remember going through this with foreclosures when I was doing a lot of foreclosures, working directly with banks. And if there was a property that was previously, was owned by HUD, there's a provision that says for the first 30 days, an investor cannot buy this property. So there, the non-investor is given by right first opportunity to purchase the house. Then after that, if it expires and nobody purchases it, then an investor can step in. But there's a period of time where they want to give the the homeowner, the home buyer, regular home buyer, a chance to get their foot in the door. And I'm not certain if that's what they're referring to here. It says expanding third-party inspection options. This kind of scares me a little bit because you start getting, unless there's significant regulations and licensing, to have someone other than the Board of Health or the building department come out and inspect the foundation or the plumbing or the electrical. And, could this, put my tinfoil hat on, could this lead to some corruption within a state, a local government because someone gets paid off because they're hiring a third party? Yeah. This kind of stuff the system is not perfect, but they're set up for a reason. So this would only, I feel like this would only work if specifically strict licensing laws. For example, Massachusetts, we have a septic. It's called Title V because that's the bill. Title V is the bill name. But so the Title V septic inspection basically states that you, when you sell a house in Massachusetts, a home, it has to pass a Title V inspection. The Title V inspectors have to be licensed by the state. There's a strict process. They all follow the same process. There's no shortcutting. Why? Because if something happens and they were, it was found out, septic failed the day after closing, and it was linked to the fact that they missed something in the inspection, that guy loses his license, gone. He's got to have some skin in the game. So having it third party makes me a little nervous. Limiting retroactive building code changes, which may or may not be advantageous, depends on the area, and removing restrictions on manufactured and modular housing. I do agree with that. It's going to, the big thing that the biggest challenge and the biggest issue I have with all this stuff about, encouraging regulations, he wants to deregulate all the things. He wants to open this up. I get why. And I appreciate the fact that they're attempting to make it easier to build more housing because we have this added a population boost. We've got more people coming into the market every day. Why can't we get out of this more housing market? Why do prices, in certain areas keep creeping up? Why aren't prices plummeting tomorrow? Because we have the current number of buyers that either can't or they're not quite ready to press go. And then you've got new buyers that haven't even hit the market yet. And those buyers they're accumulating by the day. Those newly formed households are creating this conundrum that is making it very, very difficult to have any kind of downward pressure on those prices. And that's why. This is why they want to create more housing to be able to alleviate that pressure. A crash will not alleviate the pressure. It won't. There are too many industries affected by the housing market. And guys, every time I watch a crash video, every time someone comments about, we need a crash, a crash is coming, it makes me cringe. Why? Because I lived through the great financial crisis. I worked through the great financial crisis. When the housing market goes down, the housing market, carries with it the largest GDP in the country. Everything, all the businesses that are attached to the housing market, okay, those spider webs go pretty far out from the contractors, builders, home improvement stores, the mom and pop stores, your lighting, your fixtures, your DIYers, all that stuff. If that implodes, it affects the jobs of all the people around it. And how can you take advantage of a crash if all of a sudden you lose the income you need to qualify for a mortgage? It took years to get out of the hole when the crash happened. And finally, when people started becoming employed and had the income, guys, what happened to housing prices? Zoop. It went back up. It went back up. This is not, let's see if I can find the data. This is not me telling you that, and I can't believe I can't put my finger on it. This is not me telling you that, oh no, a crash is not going to happen. No, I'm telling you that based on data, this is what will happen if the market crashes. What we need is a soft landing. We need soft downward pressure on pricing, increase inventory, and then allow income to increase at a higher rate. I've been banging that drum for a while, guys, and I'm not going to give up on it. Let's see we'll see what's going on in the chat. We got a couple QQQ. Yeah, new construction is horrible. Yeah, for sure. There's got to be. I'd like to see some regulation on builders. Thank you very much. Or consequences. Consequences for shortcuts. How about that? Consequences where it's not up to the homeowner to file a suit. How about the town, the licensing board in the state that they're licensed in, they have someone to report to. They have to get some accountability for the stuff that they're doing. All right, I'm going to, let's see, we got a couple QQQs. Make sure you put QQ if you got a question. Make sure you drop that QQQ in front of the question. All right, so I'm going to get back to, let's see, Jose asks, says, what's the typical ranch house size for a family of 3? Do you prefer a slab, foundation, or basement? What are the pros and cons of each? Oh, it's a loaded question. So typical, I'm going to say that it is going to depend on your area. Without looking at the data nationally, I would probably say, 1,200 square feet. It depends. If you're looking at homes that were built in the 50s, 60s, you're probably talking 700, 800, 900 square feet. We have quite a few of those style, that style of home, and they're 900 square feet. I made a little commentary last week about the dynamics of first time home buyers. First time home buyer being broad reference anyone of any age buying their first home. The expectations are going to change. expectations are going to change. The expectations of what a first-time home buyer buys has gotten a little crazy. They want what they grew up in. And it doesn't work that way because your parents probably didn't buy. Maybe they did, or maybe they added additions, but their first home was probably not the home that you're sitting in. This is something that you build as your income grows, as your family grows. So the expectation to buy a home and that's the home you're going to be in for the next 20 years, 25 years, you need a stepping stone. And I think that rolling back and looking at a first-time home a little bit more conservatively. What do you need? Not necessarily what you want. Don't need a garage. Be nice to have. Don't need a garage. Basement, slab foundation or basement, you ask, Jose, it depends on the area. Here in Massachusetts, specifically, I'm on the South Coast, most homes have basements, but that's because of our water table. You head down to the southern states, not the case because of the water table. A lot of it's because of the water table. So I prefer a basement. I grew up with a basement. I've always had a basement. I think it's great for storage. Laundry's down there, out of the way. Having the laundry in the basement frees up space for the main living area. I like to have places to store that is not my garage. I might be, in the minority, but I actually put my car in the garage. It's not full of stuff. No, too much stuff. If I have too much stuff, it's time to get rid of stuff. So, hopefully I helped you out with that, Jose. I think that there's definitely pros and cons to all different types. I mean, the slab foundation, the pro is you don't have to worry about water leaking into your basement, but then where your utilities go, full basement. Yeah, you put your utilities down there, but you gotta, keep an eye on it for water penetration and things of that nature. So I think depends on where you live. In Omaha asks, so we finally found a perfect house for us back in February. We got a 5.5% rate fixed at the same time. That's terrific. What is the rate now? How is the excursion in Iran? Yeah, because it's not a war, it's conflict, going to affect it in your opinion? So I actually went into this in depth last week. In terms of, how it will be affected. My Reader's Digest version, short version of that is, we got to watch the economy. We got to watch oil. Oil affects everything. I was watching actually a video lunch today about, where the economy is going, how significant oil price per barrel, how significant that is in relation to the employment rate or unemployment rate. Very eye-opening. And how it compares to all of the last recessions. Needless to say, if the short version is if the price per barrel keeps going up, we will be in a recession if we're not already in a very short period of time. So oil affects everything. We're not talking about gas. We're talking about the oil they use in products, manufacturing. It is in a lot of things on our day-to-day. So as far as your rates are concerned, I was actually going to touch on that later, but I'll do it now. So the rate right now, Anna, is, the general 30-year fixed is sitting at about 6.29%. It jumped up Friday the 13th, interestingly enough, 6.41%. Before the conflict, the Iran conflict, I mean, we were at 5.99. And again, this is the 30-year fix. This is just a very from Mortgage News Daily, very broad. Depending on where you live, depending on what your FICO score is, depending on the loan program, there are going to be some variations. But to just kind of give you I follow this to kind of get a trajectory of the rates, because they did come down just a scotch, not much. So hopefully that helps. Headers 12 says a family member bought a new Starlight home because the builder advertised, "We don't sell to investors." However, the builder owns The builder owns 100 plus homes in the neighborhood that are now rentals. Oh boy, that sounds like a conflict of that sounds like false advertising. How common is that? I don't. You know what? I'd have to research it. Off the cuff, I have not heard of that being a common issue. I mean, are they, if you have a builder that is trying to weather the storm of a very volatile housing market and they build these homes on speculation. It's happened during the great financial crisis. That's what, builders got in trouble because they were building too many homes in order to not lose money on the note that they're carrying to cover the cost of those homes. Putting a renter in there temporarily to cover the cost, it could be a strategy, a short-term strategy, until those homes get freed up. And I don't know if his intention is to, section by section, maybe there's short-term rentals, 6 months goes by and once the renters move out and go in, you clean it and you sell it. But can he advertise as new construction at that point? No, it's not new. Someone's lived in it. That sounds very strange. That sounds very, very, very strange. I have to Google Starlight Homes. That sounds a little suspicious to me. For sure, for sure. Let's see who we got. What else we got? Let's see. Jose says, I don't think there will be a housing crash as long as upper middle class or even middle class keeps buying houses and can afford them. I better keep saving money. Yeah, you know what? My advice, my strong advice right now for anyone, given what I know about the current economy, given what I've seen in the past, save. And I'm not calling doomsday. I'm not anything of that nature. More important now than ever. Save. That's what I'm doing. Weather the storm. There's a lot to be said about having some money in the bank. And if nothing happens, you got money in the bank. Save. MH08, good to see you, my friend. So I keep gloves in my glove compartment. Yep. Amen. Let's see. Rebecca says, I have to buy my condo for sale in a month's time. Do you know how the Brighton condo market is in RBC or Con Ave? I have no idea. You talking Brighton, Massachusetts? No idea. Yeah, you'd have to talk specifically to an agent in that area. When I look at a lot of the data that I see, and I've got some data as far as, I often pull up data for what's happening across the country, why prices are happening across the country, but it's not, you need to go granular, especially if you're looking to sell your house. Nothing replaces not only the granular data, but the interpretation of the granular data. And that true as I'm sitting here can only be done by an experienced agent, an agent that has experience transacting in that area. And so they have a feel for the buyer trends, what the buyers are looking for. They have a feel for the neighborhood trends and what's moving, what's not. They have a feel for pricing strategies. Because if you're in a market that maybe is a little bit on the down low, it's starting to slow down, that is going to be significantly your marketing strategy is going to be significantly different than if you're in a neighborhood that there seems to be an uptick in buyer activity. You might be able to be a little bit more aggressive with the list price, whereas if you're on the downslide, you're going to be a little bit more conservative. Price it maybe a little bit less than what you think the market value is. The only people that know that are the ones that know and can interpret the local data. And I am not the person to do that for this area. I'm sorry. For sure. Vegas Jimmy. Oh, I love your avatar. Love it. My ex-husband had a motorcycle. That was one of the things that we had fun riding the motorcycle during the warm weather. Thank you again for the awesome referral here in Vegas. Woo! Selling our home back on contract for our purchase in Ohio after our other one fell through. That, my friend, is a win all day long. I'm so happy for you. So happy and so glad it worked out for you. Yes, Asian Dawkins says, agree with that. Save. And Vegas Jimmy says also locked in 5% VA. Wow. Holy cow. 30-year just in time before it blew up. You know what? Timing is everything. And, keep in mind, guys, there is a saying. It says, is it date the rate, marry the house, which I think is BS. Because the pretense of that saying is that, buy the house, don't worry about the rate. You can always finance later. No. Never, ever, ever make a purchase unless you can afford the payment now and into the future. If it's a stretch to the point where it's uncomfortable, you're going to be eating mac and cheese for the next 30 years, you shouldn't be buying that house at that price. No, save some money. But you can afford the rate and then it goes lower. And so there's a big refinance boom. During the great financial crisis, I was on that ride, got a fantastic rate. I could still afford the payment at the old rate. Now it's saving even more money. But, if you can be at the right place, sometimes it works out. And I'm so glad. You got that rate. Tia says, are you saying save, don't buy? Not necessarily. No, not at all. Because I need to sell. No, I'm not saying that at all. Not at all. What I'm saying is, because at the end of the day, buying and selling, and I really, really, really am adamant about this, and will go toe to toe with anyone that says any different. Those decisions are made independent of the market. It doesn't matter what the market's doing. You got to look at your own personal situation, your financial situation, your home situation, job, family, health, all the things. Why do you want to move? Why do you want to sell? Why do you want to buy? If you need to sell, and the reason why you're selling is, all the things personally line up. And you say, I'm moving because I'm going to move in with my kids. I want to be near my grandkids. Quality of life improvement. Well, if you can afford to do it, the timing's right, everything, you're able to do it, then sell. Never time it. This is not the stock market. You're not on Wall Street. This is your home. Quality of life trumps everything. Why? Because we don't know. There's not a person on this planet that can predict what's going to happen tomorrow with this market. No one. And if the need to buy, the need to sell is strong enough, why do you want to put that on hold? Why? Only given a short window of time, be on this planet. If everything checks out, same with buying. If you can afford to buy the home that you want to buy, everything checks out, all the boxes and everything else at the current rate and all the stuff, then do it. If the rates drop, well, then great. Go refinance. If they don't, guess what? You got a home to enjoy. So no, what I'm saying on the saving is don't buy a new car just because you want a new car. Don't go spend money necessarily frivolously on things. Just think twice about things. Be a little bit conservative. And just watch where your money goes. That's all I'm saying. But, save is not, that's life advice, I guess, unsolicited life advice. But no, if you want to move and you see a house that comes on the market or a condo or whatever, and it checks the boxes and you can afford it and all the other things line up, then do it. Absolutely. Pull the trigger. People move 365 days a year. Been doing this for 30 years. This is fact. Okay, my family moved here in the 80s, closed a week before Christmas, 4 kids in tow. Closing the week before Christmas, 4 kids in tow, not ideal. Why do we move here? My dad was transferred. We need a place to live. Was that a necessity? People move. I get calls. In the past, I've gotten calls Christmas Eve, New Year's Eve, we're ready to buy, we're ready to sell. We want to do it. We saw a house come on the market. Homes get listed during Christmas vacation. Happens. So yeah, don't put your life on hold for an economy. Your personal economy is the most important thing, period. Your personal economy, which is why I said, if when you can, save the money, because no one is going to look out for you except for you. Hello, Angie, good to see you. Chiming in from California, eh? His family always comes first. For sure. Agent Dog says most banks are not allowing refi for property sold in the last 2 years in Florida due to the equity not there. Interesting. I haven't heard that. Because the fact of the matter is if a property is sold and the purchaser of that property puts 50% or more down, they have equity. They have instant equity. So I don't understand. I'm not quite sure, unless there's a regulation in Florida. I haven't heard that. There you go, Jose. I love that. I have a regular savings account, 2 CD savings account. Yeah, there you go, my friend. Woohoo! 100%. Boss lady, I love your handle. Is it smart for seniors to buy a home after selling the current one? That is going to be a decision for you personally. And I'm sorry if it sounds like I'm sidestepping, but I have had clients that have purchased homes in their late 70s. Doesn't matter the age. It's all on what is important to you. It's all on what is important. If it doesn't, if owning a home, doing what you want to garden, you want to, be active, all the things, then do it. The lender, there's no restriction. They cannot discriminate. They can't discriminate against you by denying you a loan, a 30-year loan, if you're 80 years old. Nope. You can, when you pass away, guess what happens to that debt? doesn't go with you. And they can't deny you for it. So it really depends on what you want. And I have had, the folks that reach out for referrals that will sell. I've had everything from they're buying another house to they're moving out of the country to they're moving in with their kids to they're selling they're selling their real estate and they're going to travel. They're going to become nomads, see the country, buy an RV. Some people do that they're nomads, except they rent. They do 6 months here, a year here, and then they go to another part of the country and do another, just to see to experience different things. It all is important to you. So no, I don't think it's not a smart thing. I think it's smart that you do what's important to you. Yeah, and buy versus rent for seniors. Again, it's going to come down to your goals and your financial goals. How are you set up financially? If you're in a situation where you don't think you're going to be in a certain place for extended period of time, you don't want to be tied to that place, then maybe rent is a better option. Or maybe if you're moving to a place that, you've always wanted to live in South Carolina, but you're not quite sure, you've been there visiting, but you don't know where you want to plant roots, sell, get a rental, rent for a year, get a feel for the area, then buy. It's always a good way to go as well. My brother did that with his family. All right. I want to get back into digging into this article. I want to get into the other executive order that Trump signed, and it has to do with mortgage credit. Like I mentioned earlier, this is the part that kind of made me a little nervous. I started to sweat a little bit. So came across this article. This is from National Mortgage Professionals. And it's what Trump's mortgage credit executive order means for LO's loan officers. So yeah, this article is written for loan officers, but is very pertinent in terms of what you can expect and what it really means to the average everyday buyer. It says, while much of the attention around the White House Housing actions has focused on removing barriers to building new homes. A second executive order signed Friday could have major implications for how mortgages are originated, underwritten, and serviced. Originated would be your application. Underwriting would be the review of the application, and then serviced obviously is after the loan closes, who collects the money and handles like escrow accounts and so forth. It says the order titled "Promoting Access to Mortgage Credit" directs federal regulators to review a wide range of mortgage rules that the administration says have increased compliance costs, reduced competition, and pushed many community banks out of the mortgage market. The administration says the goal is to expand mortgage credit availability, lower lending costs, and restore competition among lenders by revisiting the regulatory frameworks adopted after the 2008 financial crisis. This is where we need to be careful. When the market crashed in 2008, well, depending on where you are in the country. For us, it was mid-2006, going into 2007 is when it started. One of the main reasons that contributed to that crash was no income, no doc verification loans. People getting mortgages too easily. No doc, no income verification means I could, as a self-employed individual, which I am, all real estate agents are self-employed, I could go into a lender and say, I want a $500,000 mortgage. Great. How much money do you make? Now, they're not asking for 1099. They're not asking for tax returns. They just ask me, how much money do I make? And I say, $2 million a year. I'm like, okay, wrote it down. How much money do you owe? None. Okay, great. How much money do you want for a mortgage? And that's how it went. And people got in over their heads like super fast, super easy. When I see that after the crisis was averted, when things got under control, the Fed put regulations in place to protect this. And then it became harder to qualify for a mortgage. And there was reasons for that. There was reasons. If you go into a lender and they say you don't qualify because your FICO score is too low. You don't qualify because you don't have enough, history on your credit report, or you have too much debt compared to how much income you make. Yes, it's a barrier, but it's there for a reason. It's there for a reason because they look at how much, an average person, how much money you're going to need for, and they do look at, total cost to operate your current lifestyle. So they're going to, they'll ask you for how much you paying rent, or how much is your current mortgage and, utilities and blah, blah, blah. And they go through all the things, to really get granular, to see what it is that realistically you can afford. Cutting that too close, loosening that, could spell massive trouble if that happens. If they turn over some of these things, and I know this administration is hot for undoing the things that presidents did before them. Well, not everything is good. Not everything is bad. Not everything is bad. Not those things are put in place. There's a reason why we put a gate at the top of the stairs when we have a toddler. The reason why we put those little plastic plugs in our outlets, when they're very close to crawling height. Okay, there's a reason why you do these things. Is because who else is going to do? Who's going to protect the toddler? Toddler's going to say, "Oh, what are these things going down? Oh, that's interesting. Tumble down the stairs." Nobody's there to stop them. Guardrails are there for a reason, and removing some of those guardrails, I think, can be dangerous. But is that what they're talking about? So this article kind of goes into that a little bit more in detail. It says the mortgage rules that could change. Because that's the thing about executive orders. It's just a statement. It's like a wish list. like he's writing to Santa. This is what I would like, Santa. I would like less regulation with mortgage lending. It doesn't mean anything. He's not outlining exactly how it happens. This is the mortgage professional. This article details what that could mean realistically. And it says the review could potentially include several key mortgage regulations that have shaped the industry since Dodd-Frank, that is tied to the great financial crisis. It says among the rules regulators could revisit the ability to repay and qualified mortgage standards governing underwriting requirements. That to me, I'm a little ability to repay. Just because they say, oh yeah, I can afford it. TRID disclosure requirements under the Truth in Lending Act and Real Estate Settlement Procedures Act. What that is there is a 3-day window that the lender must provide a truth in lending disclosure. It is a disclosure listing all the expenses that a buyer is going to get charged at closing. They did that because unscrupulous lenders would not disclose it up front. The buyer would show up at closing. All of a sudden, there are fees that they didn't know about inserted into this mortgage. And you're sitting at a closing table. This is the thing that drives me crazy. This is where emotions come into play. Could a buyer say, oh, no, you didn't tell me about those, so I'm not signing this? Of course. They could absolutely do that. They could take a step back and all the things. The reality of it is, it doesn't happen. And lenders took advantage of that. Why? Because you've got a buyer that maybe you just sold your house and you're buying another. And if you don't buy this today, you're going to be homeless. You're going to be homeless. And you're sitting in front of the title company or attorney, depending on how your state operates, and you see these disclosures and you don't like it, but you sign it anyways. And you agree to pay whatever they have on that statement. They took advantage of a lot of people that way. A lot. This circumvents that because they have to give this to you 3 days. You have to sign off on it and you can't close until that happens. If that truth in lending statement is altered in any way, you got to wait 3 days. So, how does that affect affordability? This is the kind of stuff that you need to watch out for. Home Mortgage Disclosure Act reporting requirements. Not exactly sure what the HMDA, what they're referring to there. I have to look into that a little bit more. Mortgage servicing regulations created after the foreclosure crisis. What they're talking about there, and mortgage servicing would be anything, not just collecting your check, but it would be if you're late on your payment. And, what is their process? What is that? There are state requirements, there are federal requirements for the mortgage foreclosure process. They've got to give you a certain number of days. They got to advertise it to the public, certain, 3 times and all the things. They've got to have a window. It is regulated. But if there's all of a sudden this lender does one thing, this lender does another thing, and it becomes kind of the wild, wild west, it could lead into another foreclosure crisis. Banks don't like to own properties. They want you to be able to pay, even if it means, recasting the loan, where they did that a lot. I forget what the term was during the market crash. It was, essentially they took whatever amount you were due and they rolled it into the mortgage, recalculated the mortgage at 30 years and issued you a new mortgage payment, kind of like reset the clock for you. Not necessarily great if you have already paid in on your mortgage, but if it meant keeping your house, it was an option. So these are all things that we have to keep an eye out for. Capital and liquidity standards affecting banks that hold mortgage assets. Now we're getting into some of the small banking stuff. Opening up smaller banks that don't have as much capital. Supervisory guidance for community banks participating in mortgage lenders. These are the things that I think the White House is more geared towards, hopefully, is opening it up for some of the smaller banks that potentially could offer more competitive rates, more rate programs. when it comes to rates, guys, and if this does happen and we start seeing competition among rates, the one thing I want to make sure you understand, there's rates and then there's APR. Two totally different things. And they're quoted on the Truth in Lending statement. What's the difference? Well, the rate is the rate. The APR is the rate after you factor in your closing costs. So that is where a lot of lenders kind of suck in. They may advertise, 4.9%. They're like, oh my God, 4.9 fixed for 30 years? Oh, that sounds like a great deal. But then you get the APR. The APR is higher than what your main bank is. Your Wells Fargo or whatever. Your Bank of America. And you find out it's because that 4.9 includes an involuntary buy down of the rate. And guess what? They're including it in your closing costs. Not as great of a deal. You only know that by knowing the APR. When you are rate shopping, you need to ask, not what is the rate, what is the APR? Don't ask the rate, it's irrelevant. It's irrelevant when you're comparing. Ask the APR, because the APR is going to tell you whether they're adding on some fees at the end, in the process. The loan originators get paid, everybody gets paid, their appraisal fees and all the things. Are there extra fees in there that they're not telling you about? Need to know. Appraisals. This is something that I've been hearing a lot of murmur on. And, the appraisal rules might change regardless of what happens with this executive order. This is another piece of the order focuses on modernizing the appraisal process. It says federal regulators are directed to consider such changes are expanding the use of alternative valuation models, AVMs. If you have ever refinanced and you have a mortgage that is less than 80% of your total value, so you have at least 20% equity in your home and you're looking to refinance, oftentimes they will not order a traditional appraisal. They'll rely on an AVM, because they did with me when I refinanced. And what that is, a computer model. And they just base it on, they don't come into the house, but they look at the AVM based on, how does my house compare? What's the value of that property based on their computer model? That is a separate algorithm. It's not a Zillow algorithm. It's much more complex than that. And they're okay because you have a buffer. They're okay with it being a little bit less, a little bit, over or a little bit under, because there's a 20% equity buffer in there. And those AVMs are popular, but they will not do that. Even if, on a purchase, they, typically on 20% down, even they'll do in-person appraisals. But if you do like 50% down, they might do an AVM or drive-by appraisal. That eliminates the need for in-person, interior inspections. They want to expand that. This is reducing appraisal requirements for low-risk transactions. There we go. I think that this right here is huge, because I'll be honest, I've had appraisals on properties that the purchasers, the buyers, put 50% down. And I scratch my head and I go, why? My people just spend $600 on an appraisal, and they are going to have, as soon as they close, they're going to have 50% equity. Are you kidding me? 50% equity, like, they don't need to know exactly what the appraised value is. They're putting 50% down. If the property goes into foreclosure, they only owe half of what they're paying for the property. It's ridiculous. It's ridiculous. Establishing clearer timelines for completing appraisals. I would appreciate that as well, because sometimes these appraisers take forever to get the appraisal process done. And it says changes that could speed up the closings and reduce loan origination costs. Everybody wants that. This is why community banks are central to the order. This is the thing that actually I think is a good thing. It says the executive order repeatedly emphasizes the role of community banks and smaller lenders, which the administration says have been squeezed out by the mortgage market by compliance costs. 100% this has happened. A lot of banks have closed their mortgage division because they cannot compete. They don't have the assets. They cannot compete with the bigger banks. So now the bigger banks have almost like a monopoly with writing loans. where a smaller bank is, potentially going to be a little bit more organic and a little bit more granular with looking at your particular situation, in terms of looking at you as a person, not a file. Take into consideration, yeah, you're self-employed, but you've been self-employed 30 years. And I've made money every year for 30 years. I think there's some consistency in that. I think there's a low level of risk of me continuing to make an income going into the future. The bigger banks, again, in my experience, it's a flippin' checklist. You've got somebody, and I can't tell you how many times I grit my teeth because literally it's somebody sitting at a desk and they're just, they're just checking boxes, whether it makes sense or not. They're just checking boxes, and it's ridiculous and it's unnecessary and it costs you money. Says the order specifically calls for tailoring mortgage rules for banks with less than $100 billion in assets to encourage them to return to lending. That means more competition. That means more competition. Whenever there's more competition, that means they're going to, there's going to be a decrease in pricing. It benefits the consumer. More competition is good. More competition is good for us. Industry groups have long argued that regulatory complexity has made it difficult for smaller lenders to compete with large institutions that have dedicated compliance departments. Community banks and credit unions have scaled back mortgage lending in recent years, a trend policy makers say has reduced competition and access to credit in some markets. It's very interesting because, you might have a situation where you're making enough money to afford a mortgage, and you have demonstrated history. Maybe you lived at home and you're not making a mortgage. You're not making any payments. You're not making any rent payments. Nothing. Because you're saving money. You're saving money. But on paper, your income versus your debt versus what you would need, for in terms of the percentage of that, the percentage of your income for a mortgage payment fits into the grand scheme of your finances. Well, again, there's someone sitting behind a desk checking boxes. And very much, if you don't have a rental history, they're going to say, nope, sorry, you don't qualify. You don't have any history whatsoever. You've never paid a mortgage bill. You've never paid a electric bill. Maybe you've had limited, bill. You have a credit card, you pay religiously, or you have, student loans, you paid religiously, but that's it. Or what, limited. But you're making good money now. A lot of these younger, home buyers are facing this, and they can't qualify because it's too stringent. If it makes sense, I adamantly agree that they need to take another look, take an organic look. Does it actually make sense? A real person. Does it make sense? Anyways, all right. Been going on my tirade here long enough. I'm going to see what you guys got in the chat. Headers says, expanding on Starlight Homes, they sell to home buyers and then turned around and sold large phases to a rental company they also own. Oh, it seems fraudulent. Yeah, that sounds pretty suspicious to me. 100%. AP good. Found out so after closing, his solar panels were leased. Previous owner passed. Okay, so this is interesting. This previous owner passed. Seller took title in lieu of foreclosure. Nothing recorded on title. No UCC showed up. What? Solar company trying to get us to pay. So for those that are unfamiliar, so UCC, when you sign in a lease agreement with a solar company, it is not treated like a traditional lien. They don't file a lien at the registry of deeds against the property. It's a different type of lien. So it falls under the same category as a mobile home. So if you buy a mobile home and you have a mortgage or a loan on that mobile home, it is not registered at the registry of deeds where you'd find your deed and your note for your mortgage note. It is filed under what they call a UCC. They file a UCC, which is still a lien. What's interesting is that most solar companies because of that, would require the transfer of ownership. In your case, yes, you own the house, but you never took possession of the solar panels and you never agreed to the lease requirements. I've helped. I've been on both sides, on the listing side and the buying side when involving solar panels. And the most recent one was early last year, actually. And in order for us to close, the buyer had to sign an agreement with the solar company saying they agree to take over the lease payments and ownership of the solar panel system. Hands down. In this case, you never did that. I don't know how the solar company has a leg to stand on, especially if there's nothing recorded, no CC, no UCC recorded. I think the solar company needs to go pound sand. Good luck to them trying to enforce it. You bought the house. I mean, that's just my take. I'd be curious to see what an attorney says, but I'd fight that tooth and nail, to be honest. Here's the thing, the flip side, your buyer's agent should have dug deeper. The buyer's agent should have dug deeper. If the seller couldn't prove that they own it, I would not have stopped there. I would not have stopped there. I would have pushed until I found out what exactly was happening with those solar panels before we even got to the point of closing, well before. I think that burden is on the agent that is representing you, because they should know. It's their responsibility to know professionally, to protect you, to make sure that they know the ins and outs of what could happen when you buy a house with solar panels. That's what you're hiring them for. It's not just to pass papers and be a administrator. Like the bad ones, the 80%ers, I call them, or 90%ers. Those are the percentage of the real estate industry, which I think is not worth the money. They're not even close worth the money they're being paid. That, unfortunately, I think that's what you got. I'm sorry, but I would fight it. Let's see. Just going to go through here. I'm just looking for, if you have a question, make sure you put QQQ in front of the question. And then I'm going to double back once I get through here. Oh, I love active chat. Makes me so happy. Yeah, make sure you put QQQ, because otherwise, because I can't read everything in the chat. Actually, I want to try to do this here. Here we go. Let's see. Alex says, I have seen several listings in Atlanta that state houses selling for $50,000 less than appraisal, which I find hard to believe. Well, it depends on when the appraisal was done. If the appraisal was done a year ago, that's entirely possible. If the appraisal was done last week, then that'd be suspicious. But it really depends. It sounds like a marketing ploy. They're like framing it like you're getting a deal. The question I would have is, when was the appraisal done? When? Because, and here's the thing. There is a difference between an appraisal and a market value, open market value. Two different things. The appraised value is just what the house would be valued at, to avoid foreclosure. They don't take into consideration what a buyer would pay on an open market. And that's where sometimes you have to look at appraisals, in such a way that it's not the end all be all. It can be a tool if you have a very difficult property to sell, get a value for. It can be helpful, as part of the process to determine value, but it's not the end all be all. When an appraisal is done for a closing, the appraiser gets the purchase agreement. They see how much the buyer is purchasing the property for. They are licensed. They cannot fudge the numbers. They'll lose their license. They have to be able to back up their numbers with data. Or they will lose their license. However, if your goal is $400,000 $300,000 for this purchase, and the appraisers, comps are coming in at $290. Will the appraiser take another look at their value to try to make it, scoot it up to $300? They sure will. They won't lie, but the thing is appraisals are not the end all be all. It's not, science. It's not an exact science. It's still an opinion. It's just opinion, driven by a little differently. It's opinion based more on data, taking out of the element. They do not take into consideration as much on market conditions as what an agent would do. Why? Because we're looking at it as, yes, here's your value, but what is happening in your market? Can we price it a little higher? Do we need to price it a little lower based on what sold 3 months ago? The appraisers don't have as much wiggle room that way, but they do have some. So it sounds like that was a marketing ploy, Alex, honestly, in my opinion. Yeah, there we go. Seems like a new marketing tool. Your instincts are correct. Adam asked, do you see rates continuing to rise or will they drop soon? No idea. It is going to determine what happens with Iran. Period. And I'll refer again back to my live stream I did last week where I kind of got granular into what was happening, the impact of the Iran conflict on the economy, on inflation, and how that impacts mortgage rates if the U.S. stays over there. And it could send rates skyrocketing. It could to slow inflation. It could send rates skyrocketing. Lowering rates has a potential to increase inflation, and inflation numbers are on the rise. It's not a good recipe. They look at I was doing some research earlier today, and one of the things that they look at when investors are looking at this or the economy in general, or the Fed, they're looking at the jobs report. The jobs report for this month, the jobs report for last month is not stellar. 92,000. It was down by 92,000 jobs. Is the jobs report for this month. For that, the report this month for last month, that is not the trajectory. Last month for the month before was the same way, downward slide in jobs. Unemployment rate is rising. They don't want this, to lower rates would be a bad move. It'll send us into a serious inflationary situation, and then recession, and then all bets are off. So it's hard to tell. All we can do is, I think that, it is, I say don't time it by the market. I understand if you're riding the line with with the rates and how it affects your mortgage payment and affordability on making your purchase. I understand that. My recommendation, my advice would be to live within your means and buy less than what you can afford. Whatever your mortgage amount that they approve you for, spend less. It gives you a buffer. Does that mean that you want a garage, you're not going to be able to get a garage? Yep. Does that mean that you want a two full bath and you can only get a bath or a bath and a half? Yep. Keep in mind, get into a home depending on what your situation is. That's why you got to look at your whole situation. You can't just make a determination based on this one metric. You got to look at your whole situation, in your household to see if it makes sense. If you are renting, if you're in a situation where you want to start building equity, get your foot in the door on what you can afford, period. You can always build later. Does that mean every time you make your mortgage payment, you're getting a little bit closer to decreasing that debt and increasing your equity? And as time goes by, the equity in the mortgage, the housing market will organically increase your equity. That happens. Even after a crash, it happens. So hard to say. I wish I had a crystal ball, but alas, I do not. I also do not. So let's see. I wanted to get into real quick. Wanted to show you guys, a couple graphs that this is actually, I wanted to show you real quick on the housing starts. Actually, I brought this up. So this is just for reference, right? Just for taking a step back and perspective rather. New privately owned housing units under construction. Total number of units. So houses being built. Single families, not for investors, not in the equation. And you can see the ups and downs as the market goes through recessions. All these gray areas are recessions, and I'm going to include this graph in the description so you can check it out yourself. Every time there's a blip, this is when the market crashed. This is when builders put the hard brakes on, put the massive hard brakes on. You can see it in the graph, and this decrease is a thing that got us in the hole, and we started to recover. It took us a few years, but things did start to recover up until January of 24. And then you can see this slide. This is why there's so much emphasis on building right now. Even though there are certain states in the country, Texas, Florida, that's not the norm for the rest of the country. Guys, that's not the norm. The rest of the country needs this housing. And a lot of it is limited by local regulations, which is why this is even a topic. This is even something they're talking about. This does not help housing affordability. A crash is not going to eliminate that. Say we have a crash. And you know what? What happens during a crash? Everybody takes their houses off the market. The people that have equity, which is a lot, there's trillions in equity. If you own a home and you are not leveraged to the hilt, which is more common than not right now, you're just going to take the house off the market. Now you have even less inventory. The buyers don't disappear. They just hit pause. A crash would only accentuate the problem. And accentuate the problem, meaning that, you think, oh, well, if there's a crash, then people will take less. No, there's going to be just less people moving. People put the brakes on. Yes, people will move. There'll always be a need to move. Always. If there's a need, chances are they're not going to be playing games with holding out for a lower price. Because when there's a desire, if there's an absolute need to make a move, you're not going to, you find the house after hunting and searching, for the right home, and you find that right home. It's not like buying a car. We can go to any car lot and buy the same car from any dealer. No, it's very personal. You're not going to let the house go. So I'm not saying buyers will overpay. They won't. Those days the ship has sailed. But, are they going to pull back and say, no, you know what? I'm going to wait until you drop 100,000. If there's a need, probably not. So how does that benefit the average the housing market as a whole? It doesn't. In my opinion, it does not. It does not. All right, I want to check and see here. And and here's the thing. Everyone's entitled to an opinion. Well, that's not just my opinion. That's just my opinion. I'm not saying I'm the end all be all. Everybody's entitled to think what they want to think, and that's okay, and I respect that. Let's see here. Polly Fox, good to see you. We lived in government subsidized housing for 11 years. Rents were $1,800. Holy cow. We bought our little farm here in rural Indiana last year for $139,000. I love that. Our mortgage is $1,174. Plus the peace and quiet is priceless. Good for you. I'm so happy for you. And you know what? Naysayers be gone. Naysayers be gone. How do people not know about APR? It's amazing how much they don't. And honestly, Angie, it's the type of thing that I think a lot of folks are at the mercy of their lender, trusting their lender is going to tell them. This is why, Angie, I have this channel. This is why I feel so strongly about making content and educating, because I want to help folks advocate for themselves, because no one's doing that. No one's doing that. The lenders, the real estate agents, if you're lucky enough to get a 10% agent, 20%, agents that really do care, yes, they're going to educate. I talked to a couple new referral partners today that were outstanding, that champion, education is a cornerstone of how they show up to new clients and with their clients. And that's great, but that's not the norm. You got to look out for yourself. You got to know this stuff and not be an expert. You don't have to be an expert, but like anything else, you get a new diagnosis from, you go to the doctor and your doctor says, oh, you got this chronic illness. Do you turn around and say, okay, doc, what do you think? Oh, I think you should take these 43 pills for the rest of your life. Okay. No. Hopefully you go home and you research and you ask questions and you find out for yourself to make sure that you should be taking these 43 pills. That's what I want to help you guys with. I really do. Because it just makes me so mad that people are not getting taken advantage of. It just, that my moral compass gets all in a tizzy. I'm just going to look and see all the questions and all the things. Jose says $2,000 a month rent is cheap, but sometimes I feel it's a waste. On the plus side, I'm saving $3,500 a month. I'm terrified of buying a house. So I think the thing to do, like renting, hands down, and I'll tell you, one of the things when I was a new agent back in 1996, one of the things that they program all agents. Renting is bad. Renting is bad. Renting is bad. You should never rent. You should always buy, because renting, you're paying somebody else's mortgage, and, owning a home, you're paying your own. And that's why you always have to, you got to buy a house. I'm going to tell you that that's not true all the time. It's not. Some people are better off renting and some people are better off owning. It depends on you. It depends on your financial situation. It depends on your employment and your family. And, you want to be, do you want to be, set roots in this particular area? Does it make sense? For some people, it makes sense to rent. Now, yes, I 100% believe in building wealth through real estate. A lot of people made a lot of money building wealth through real estate. Our president is one of them. And because it's a way to help the value, you're taking advantage of the value over time. It's a crock pot, not a microwave. Over time, that equity increases. Yes, there's ebb and flow, but that's why it's a long-term investment. It's like stock markets. My investment, I'm going to be working for a while. I look at the stock market and my investments and the way that my money is invested. I don't pay attention to it. I don't look at it. I don't check it. Why? Because it's irrelevant, because I'm not even going to touch the money until, at least another 15 years at the very least. House is the same way. And you know what? It might mean you got to go through all the checks and balances, Jose. You got to look at every little, make a list, a pros and cons list. I'm a big believer in pros and cons. Write it out. What are the advantages of renting? What are the disadvantages of renting? If you want to be in a situation where you want to have freedom to make changes to your house and not be afraid of the landlord kicking you out, there is an element of instability of when you're renting, because the landlord could just decide they don't want to be a landlord anymore. Now, no choice of your own, you got to look for a new place to live. Some people are okay with that. I know I wouldn't be. I'm very risk adverse. I like to have, fixed mortgage. I like, predictable, as much as I can, finances. That's stress I don't want, but it depends. It's very personal. I hope that helps. I hope that helps. Let's see. SMVB says, I went to a smaller local bank. The rate is a bit higher, but I received super personal service. Also, the rate wasn't my primary motivation, since once my house sells, we'll be able to pay off the mortgage. That's good strategy, number one. But I think what you just said, it's the nail on the head, because I think what you're going to find is the rate is not where you're going to see the difference, because all banks are going to be competitive because they want your business. Yes, look at the APR, but even then, it might be similar. The big difference is going to be service. Not service after the loan, but during the process. If you have tons of questions, you need to get the person that's helping you on the phone, and the same person. You deal with a bigger bank, maybe you might be talking to somebody different every time. It can be very stressful, especially if you have a lot of questions, and you want to get straight answers, and you want the same person, to give you support for that. There's something to be said about that. Let's see here. Well, thank you very much for that. Start watching videos and learning so much. Thank you. That just made me super happy. I really appreciate it. Not happy that you watched the video, but that you learned something. That makes me infinitely happy that you learned something. Let's see here. Yes, whether the real estate process didn't discover the solar panel issue. Agreed. 100%. Let's see. So how many times can someone refinance their home? Are there any limits? Depends on the bank, but let me tell you, when the market crashed, I talked to my local lenders, and some people were refinancing like every 6 months. It was ridiculous. The thing about refinancing isn't typically free. There is a cost. So you got to look at what is the recapture for that refinance. If in other words, how many payments do you need to make before you break even? It costs you $2,500, $3,000, $4,000. It could be a couple years. So does refinancing again and again and again? Well, now it's going to take you 4 years, 5 years. And then if you plan on selling it, does that really make sense? You've got to look at it from, take a step back and look at the big picture. And you say, okay, I'm going to save myself, $200 a month, but it just cost me $250 a month before I even break even. You got to look at the big picture. Big picture is the thing you've got to take into consideration, but it really depends on the mortgage loan, Jose, on where you're at with that. Okay, on commentary on my doing your homework, going to the doctor. Thank you so much for your input, MHO. I can always count on you for this. Was at the doctor today. She was pleased I did my homework. Bravo. If I had a gold star, I'd give it to you. There we go. Well, thank you so much. Appreciate you. Moving to Lancaster. Appreciate you. I know it's getting late, guys. Actually, I'm going to save this article for next week. Yeah, because it's getting up towards time for dinner time for me. I'm on the East Coast. It's almost 8 o'clock. And all the things. I want to, because it is St. Patty's Day, I'm going to leave you guys with an Irish blessing on this, because I think it's appropriate. And, I think this is very, very, very applicable. It's a typical traditional Gaelic blessing. May the road rise up to meet you. May the wind be always at your back. I can't do an Irish accent very well. May the sun shine warm upon your face. And until we meet again, may God hold you in the palm of his hand. I love this blessing, and I think it's something that I would, in this time of conflict and just stress, massive stress, whether you're looking to buy a house or not, it's stressful out there. I wish you guys all the best, and I appreciate you from the bottom of my heart. I appreciate you guys spending the time Tuesday evenings here and being active in the chat and telling me what the things are, and you're in sharing your wins and sharing your concerns. And it makes my heart full when I learn that all my endless blubbering, whatever, has been helpful. That makes me super happy. So I appreciate y'all, and hope that things will go well. I'll see you guys next Tuesday, 6 p.m. Eastern. And as I always say, and every live stream, as you go out in the world, be curious, not judgmental. There's a lot of things we don't have to see eye to eye. We don't have to agree. That's okay. We can respect each other's decisions, but instead of jumping to conclusions and judging someone, try to find out a little bit more about them. Be curious. Ask questions. I want you guys to ask questions. Have a great week. Have a great weekend. And I'll see you guys next Tuesday, 6 p.m. Eastern, sharp. Be good and enjoy the green beer. Ciao.